at the London Library, just a stone's throw from Helios's office here on St. James's Square. Not only is it a magnificent space, but it's also a very appropriate place for us to take stock on the mission that we set out to achieve many, many years ago, to see how far we've come, and to look ahead to see what the road might bring. And as always, to see what else we could be doing to achieve a mission that is still very near and dear to our hearts. I'm very passionate about Africa, very passionate about Africans, and I've always felt that the most important thing I could do was to contribute to the socio-economic development of the continent. And, there's only one way in which I know how, which is investment. And so the notion was really to channel global capital and expertise into African companies, use that to drive the development and growth of these businesses that provide employment, goods, and services that make people's lives better at prices they can afford. Fundamentally, what we do as an investor is we work with management teams, entrepreneurs, corporate partners, other investors to provide capital, resources, and know-how to companies operating in Africa, which are having a meaningful, sustainable, positive socioeconomic impact on the continent. From these, we derive consistent and attractive investment returns for our investors. And in so doing, we're able to create overall real growth with real impact in Africa. When one thinks of impact, I think typically one immediately gravitates towards, well, what are the portfolio companies doing? But from our perspective, the impact that we have on the continent is actually threefold. I'd say one is capital, expertise, and then the portfolio companies themselves.
Africa remains one of the last untapped investment arenas, and for us, the most exciting part is the opportunity to invest growth capital into businesses rather than just recycling capital. This generates sustainable returns for investors, but also significant impact for the companies and communities in which they operate. There are two types of capital we've been able to attract. The first type is equity from Helios managed funds. We have raised around 3.4 billion and invested this into companies on the continent. The second type is supporting our portfolio companies to raise additional third-party capital for growth, and we estimate that they've raised over 5 billion. We adopt a pioneering approach to build the capital markets infrastructure and ecosystems around us, in many cases with first-time investors and with brand new investment types and structures. I would highlight three relatively recent equity issuances. We listed Vivo Energy concurrently in London and Johannesburg in 2018, the first concurrent LSE and JSE listing in over 2 decades, and the largest UK-listed Africa IPO in over 13 years. We also listed Helios Towers in London and Fowry on the Cairo Stock Exchange, and that was the first African fintech to list on African soil and went on to become the first Egyptian fintech to reach a market cap of $1 billion. And so we're really proud that collectively today they have a market cap of 6.4 billion and a long list of blue chip investors. But the mainstay for us is really the issuance of debt to support growth of our companies. And we are one of the largest issuers in Africa, with our companies collectively issuing around $1 billion on average of debt every year. Through this, we are also able to build the capital markets infrastructure around us, which paves the way for future companies to raise capital more easily and global investors to access opportunities more readily, which accelerates the virtuous cycle between impact and capital on the continent.
In our experience in our markets, there are probably fewer levers in the toolkit to drive returns. And so for us, underlying business growth remains a key lever, which means that we place a lot of emphasis on portfolio operations as a creator of value. So whether that is providing expertise or capabilities to our portfolio companies, or really just opening up our global networks to our management teams, we see these activities as a key part of our investment strategy. Helios is a company founded by Africans and staffed by predominantly Africans. We bring this unique perspective that combines a global outlook and experience with a deep understanding of the local realities and trends in which our management teams operate. So for our portfolio company CEOs, having a partner at the table that has deep local experience, but also local connectivity to the financial, the business, and the regulatory communities locally is incredibly important to them. Key part of our investment approach is the value creation plan, which we jointly develop with the management teams. Our human capital teams support our companies with areas such as executive recruitment, organizational design, but also even in areas around aligning cultures and values. We provide training in areas such as health and safety and diversity, which is important not just from a compliance perspective, but actually also ensuring that our businesses and our companies can attract the right talent and providing an enabling environment for such talent to thrive. The other thing is in our markets, there are various challenges that are nuanced, especially around areas like supply chain management and power. We focus on making sure that our boards have the best in-class governance, but are also designed to support our management teams. So typically, our approach would be to have a mix of management and shareholders, but also very importantly, have industry experts that can really leverage their expertise in supporting management in delivering strategic initiatives that are really in line with our value creation plan.
In addition to the impact generated by our capital, capabilities, and expertise, the businesses in which we invest also create significant impact. We will highlight this with 3 portfolio company examples across 3 themes of climate, financial inclusion, and people and communities.
It's no secret that Africa is experiencing rapid economic growth, population growth, and rapid urbanization. All of these factors fuel what is an insatiable demand for power. However, more than half of sub-Saharan Africa lacks a connection to an electrical power grid. As a result, many businesses and households in Africa rely on heavily polluting diesel generators. We find ourselves stuck between an immediate demand for power and a desire for a sustainable long-term solution. Starsight provides clean, captive power solutions and energy efficiency services to large commercial and industrial customers. Starsight addresses this challenge faced across Africa by providing customers with reliable power, whilst introducing renewable energy into their consumption, and at the same time, reducing the cost of it. Helios invested at Starsight's inception in 2015. We developed the business model, and the business has since used our capital and our expertise to expand substantially by investing $25 million in our equity. We used our networks to bring in local debt providers and international DFIs, collectively providing about $35 million in debt. And we've also attracted equity co-investments to the tune of about $40 million. Helios's expertise has allowed Starsight to grow from a company with just a handful of employees and 30 sites to a structured organization of more than 100 employees and more than 500 operational sites. Starsight has a significant positive impact on the environment. They replace the customers' traditional diesel generators with rooftop solar panels, and then often use batteries to store the excess power generated by those solar panels, reducing their clients' diesel generator usage by more than 70%. Starsight solutions are powering businesses that are essential to the communities that they're being implemented in. These include critical services, as well as industrial clients that really underpin economic growth. They've now installed over 45 megawatts of generating capacity across their sites, addressing the energy challenge that these businesses once faced. If we just look at the last 12 months, Starsight has doubled its installations year on year. It's grown its revenues by 40% and its profits by more than 70%. Starsight was only an idea 5 years ago, and now it dominates the market in Nigeria. And we're currently on our way to replicating that success in Ghana and also Kenya as we grow Starsight into a Pan-African business. And I'm really proud to play even just a small part in that journey.
Like in most African countries, cash represents over 70% of consumer payments in Egypt. In addition, Egypt has over 24 million of unbanked and underbanked women. That's nearly 73% of the country's adult female population. Fowry helps solve this problem of financial inclusion by driving card acceptance and by providing consumers with an easy and convenient way of paying for goods and services, either online or through mobile channels. Consumers who, in the past, have used cash to pay for goods and services are now increasingly using digital channels, either through third-party mobile wallets, which are mostly powered by Farrag, or through Farrag's own mobile wallet app. The uptake of these digital services have been accelerated by the current COVID-19 pandemic. We've worked closely with the company's CEO and board in setting the strategic direction for the business. This has translated into revenue growth by a factor of 4 times, with the company processing on average 3 million transactions on a daily basis. This has helped create over 600 jobs at Farrag. Farrag has also played a critical role in empowering SMEs in Egypt by providing SMEs with working capital financing and enabling them to accept cards. In addition, Farrag has played a big role in driving financial inclusion for women. In 2019, the company has launched the first female-focused electronic payment network in Egypt. Farrag is well positioned to continue driving financial inclusion in Egypt and capture the significant opportunity arising from the ongoing digital transition in the country. As an Egyptian, I'm really proud of what we've achieved with Farrag and the massive impact that it had on transforming people's lives.
Africa is clearly one of the fastest growing consumer regions globally, which provides a huge opportunity for investing in the consumer sector. But there are still some inherent challenges. Affordability still remains quite a constraint, and when you look at whether it's innovation or local production, it's still heavily underinvested on the continent, which has led to quite a significant dependency on imported products. If you look at Nigeria, for example, it's one of the largest consumers of tomato globally. But up until a few years ago, the tomato paste sector was 100% reliant on imports. If you shift the value chains locally, you can create jobs in production, jobs in manufacturing, and the ripple effects of that on the overall economy are pretty sizable. In 2017, we partnered with GB Foods to create GB Foods Africa. GB Foods contributed their cubes business in Africa, and we acquired several brands to create one of the largest companies in the food space in Africa. This scale provided a really interesting opportunity to solve the problems around local production and also really invest behind developing the categories they were operating in. Large-scale problems require large-scale solutions, and when we look at GB Foods, given its scale, we were able to invest significantly, both financially, through CapEx programs where we deployed around $100 million into production facilities and bolt-on brand and M&A acquisitions. And we also invested into the team through the localizing of the HQ into Africa and senior hires of local operators on the continent. We were also able to catalyze the capital market ecosystem, and we actually raised tens of millions of concessionary financing from local banks and central banks and regulators. The tomato processing and farming project we conducted in northern Nigeria is probably the best example of deploying capital and expertise for positive financial and social outcomes. We managed to increase yields by an order of magnitude of 10 times and actually produce tomato for the first time in Africa at a cost that was competitive with the import equivalent. In September 2021, Helios exited its entire stake in GB Foods Africa back to our partners GB Foods, and in the process we were able to achieve strong financial and social outcomes. But as I look back at the last 4.5 years, I think the real success was around the execution of the value creation strategy. We were able to shift production from around 30% local to just about 55%, and this has improved the sustainability of the profit. We've also been able to achieve pretty strong financial returns and direct social impact at the same time.
There's a virtuous cycle to our business. We attract capital from global institutions and invest that capital in African businesses driving core economic growth. We build profitable, socially responsible private enterprises, creating value for shareholders, employees, supply chain, and the wider community. This results in Helios generating consistent investment returns as well as lasting social impact. We've repeated this cycle many times over the last 2 decades across 4 funds and more than 30 portfolio companies. Each cycle has allowed us to refine and improve both returns and the wider impact we're able to have.